Hello and welcome to DMA's continued webinar series, and thank you for joining us. Today we will be diving into the wonderful world of VAT. We have a very exciting day for all of you. Now, just a couple comments about DMA before we dive into this wonderful world of VAT. DMA has been serving our clients, state and local tax advisors, for nearly 50 years in the U.S. and Canada. We've recently expanded into international tax, including VAT and customs and duties, and we're very excited to announce that we have opened our international headquarters in Hamburg, Germany. We are a proudly employee-owned company, and our goal is to serve as an extension of the tax department. We partner with our clients to provide tax minimization, recovery, compliance, process improvement, and most importantly, as we're all here today, knowledge transfer. So you can see some of the focus areas that we have down below here, but today we're going to be focused, as I mentioned, on VAT, technology, and process improvement. And I'm going to now turn it over to Angelo Torres to introduce himself and lead us through, again, the wonderful world of VAT.
Yeah, great. Thank you, Angela. Hi, everyone. Good morning, good afternoon. My name is Angelo Torres. I'm a director of VAT, and I'm the U.S. VAT practice leader.
And hi, my name is Joni Johnson-Powell. I'm the Vice President of our Tax Technology Consulting Group. I lead our delivery team, and we're really excited to share with you today the wonderful world of VAT. So we're going to get started with a polling question, and then we'll jump right into the content. So our first polling question is, what tax technology solutions are currently utilized by your tax department? And you can choose more than one. And so we've got third-party tax engine, ERP native functionality, data analytics and reporting, e-invoicing, and indirect domestic VAT returns compliance. And I would say that, over the last few years, we've definitely seen an increase in data analytics, reporting, as well as e-invoicing. So really interesting to kind of see where everyone is from a tax department function perspective. Any thoughts about that, Angelo?
Yeah, I think it's, I'm looking at the polling and looking at how things are being responded right now. It seems it's very strong that the clients are looking at a tax engine. I'm curious to see how much of the clients are focusing on invoicing. It looks like 30% of our respondents are focusing on invoicing. So I think overall, these different types of solutions are very much used right now. That's exciting.
Great. So here are the results of the polling. And so, yeah, 60% of the attendees are using some type of third-party tax engine, but quite a few are still using some ERP native tax functionality. Data analytics comes in at a close third, e-invoicing, and then also, VAT returns and domestic compliance. So that's great. All right, well, let's jump into our topic today. And where we're going to start off is really kind of where we find ourselves today. Looking back, it's been maybe, this is my first webinar this year, but I look back at what we covered last year, and we were all kind of in the middle of a pandemic. And it was very interesting to see kind of the evolution of where we are today. And so an important part that we're going to talk about today as part of the strategy and managing VAT is, where are we? What have we seen happen, and where are we going? And so as part of the evolving digital tax strategy, there's a lot of areas that is an important focus to the tax function. We've seen a lot of global legislative changes in the recent years with the EU VAT changes coming up in July 2021. We've seen changes from in the VAT rules in the Middle East, as well as dealing with the complexity of taxing jurisdictions like Argentina and Brazil. We've also been seeing a lot more requirements with electronic exchange of taxpayer data. So the taxing authorities are looking for taxpayers to actually provide real-time information for their transactions. We're also seeing some changes around marketplaces and collections. So an increased burden for the taxpayer to collect taxes on behalf of their customers with marketplace rules. The other area that I think is really important for us to consider is the expanding skill sets that tax professionals really need to come in and have. So we're looking at advanced analytics, transformation strategy, because you have data coming in from multiple locations, multiple systems, different countries, and really also managing the risk associated with being with meeting your tax compliance needs. And so those skill sets that tax professionals had 5 years ago even are very different today and require a different focus in terms of resourcing and training. And then of course, where we find ourselves today with the unpredictability of financial events like COVID. COVID has significantly changed the way that we all do business. It's changed the way that our tax departments are staffed. And we're seeing that really the tax function is requiring us to do more with less. And so let's go ahead and flip to the next slide. And we'll talk a little bit about that strategy. And so I think at one time, you know, we looked at tax technology strategy as part of maybe an overall focus from a tax function perspective. But I really think that now, as we look at the evolving roles and responsibilities of tax, it's really a continuum, right? So not only do we need to be concerned with, you know, audit and audit risk, but it's really a lot of other areas that we need to focus on in order to manage the day-to-day tax function. So that means resourcing and development, making sure you have the right resources, you're able to do more with less, as a lot of our clients are seeing these days. Being aware of a continual effort to process improvement, so gaining efficiencies on a day-to-day basis. One area I think we're also seeing is that tax is no longer viewed as a cost center, but really looking at how tax can provide some revenue generation as well. And so I think as we look to the evolution of where we are from a tax perspective in the day-to-day management of our compliance responsibilities, we have to keep all of these in mind. And our tax strategy is not, you know, a once a year or twice a year review, but it's really a daily continuous evaluation of where we are today. And so with that, I'm going to pass it on to Angelo, and we're going to jump right into, you know, how this is affecting what we do from a VAT perspective.
Yeah, thank you very much, Joni. To get to know the audience a little bit better, we wanted to start with the second question about which VAT activities fall under your responsibility. It's a multiple choice response that you can provide. It can be 1, VAT reporting, 2, tax technology solutions, 3, controversy relating to VAT, 4, are you the first point of contact in your company relating to VAT questions? 5, are you responsible for keeping track of regulatory changes? 6, are you responsible for managing and implementing e-invoicing solutions? Or 7, others? And I'm very curious to see what the end result will be of this specific question, because like I said, it helps us to understand the audience. It helps us to know what are you responsible for. This part of this webinar is to talk about how we manage VAT. And these are all different type of activities that are part of that. What do you think, Joni? What do you think that U.S. multinationals manage the most? And I think you're
well, I definitely think that the VAT reporting is becoming a much more important, you know, aspect of what U.S. companies are doing today. But I'll really be interested to see, you know, what all responsibilities our participants share today.
Well, yeah, you're right. It's the VAT reporting. That's number 1. 53% is of all responses received focuses on VAT reporting. I think a very close second would be keeping track of regulatory changes. That would have been my response, to be honest. We see when I speak to US clients, one of the responsibilities that they have for their US operations is keeping track of all the legislative changes. Now, to level set the conversation, to level set this discussion about how to manage VAT, we wanted to first talk about the different type of activities that we see as being part of the VAT function. In your middle, we're showing you all these different type of activities that I will go through it in a second. But at the same time, also want to highlight what you see on the left of the screen, that these VAT activities are managed by different type of resources within your company. You see it being managed, or certain activities managed by a US-based Indirect Tax Manager, non-US based, legal, IT. I've seen that sometimes certain VAT activities are managed by transfer pricing. So there's many different resources within your company that are actually already involved in the VAT function. Now, the VAT function itself, you can split in many different activities. So you start on the top of the screen is the supply chain and M&A transactions. When you move to an e-commerce model, when you perform a transaction, where you acquire a business, there's a lot of VAT impact around that. That is part of a VAT function. A resource also needs to help with IT project support. When you, for example, implement an ERP solution or implement a procurement solution, there's always a VAT resource that's part of such an implementation. Well, we just had the response, and the number one was VAT reporting. So I think everyone understands it's very clear that part of the VAT function is compliance, making sure you file your VAT returns. Then when we look at financial accounting, is really making sure that UGL postings are correctly booked into the system from a VAT point of view. And we see as part of the VAT function is that a resource will get ad hoc questions from its business on how to book certain transactions into the system, whether a VAT GL account should be used or not. So that's part of the conversations and discussions within a company. Then when a company has actually implemented a tax solution, implemented a tax engine, implemented a VAT reporting solution, then that solution also has to be maintained. And that's what's part of the activities that then a VAT function continues. Second on the response that we saw was regulatory changes. So I think that one is very clear. For a company to be able to be compliant globally, for a company to be able to manage its VAT risk, it needs to know the regulatory changes. So that's definitely part of it. Then the last one, controversy. Controversy, you could look at it from the point of view audits that are taking place in the world, tax queries that you might have, authorities taking certain type of opinions that a company has to deal with. That is part of VAT. Because of all these different type of activities that we have as part of the VAT function, and many of those activities being executed here out of the US, what we also see is that there is an increase of VAT activities performed by non-VAT resources. So IT, legal, that is part of your company, they are more and more having to deal with VAT that they used to 5 to 10 years ago. And and part of it, why they have to deal with it more and more, is because US companies are expanding globally, more reporting requirements are increasing, that results in that more data needs to be shared to the tax authorities more frequently. And at the same time, it's also because of the shortage of talent that has the right skill set to actually be able to manage a VAT function. Well, at the same time, what we also see companies as a need, and that's almost a weekly discussion at the moment with companies, is the need to minimize compliance process cost. VAT is a transactional tax that needs to be reported, but at the same time, clients want to report this in the most cost-efficient way. So there's always ongoing conversations about how to do that. Well, when we gone through the VAT function and different type of activities to perform, what we also want to make a split between is non-recurring activities and recurring activities. On this slide, we're focusing on the non-recurring activities that you can then split between non-recurring activities that are very large projects and recurring activities and non-recurring activities that are very small projects. Large projects that are recurring activity that involve VAT are, like I just said, system upgrades, like an ERP implementation, or your company is going to an M&A transaction, a carve out, a split, acquiring or selling a type of business. All of that impacts VAT that then also has to be managed. When we look at tax technology and upgrades, it's like I just said, looking at tax technology, tax engine implementations, looking at VAT reporting solutions. That is often a very large multi-year project, especially if you look at a global project that is a non-recurring activity on a yearly basis, but it has a multiple year project plan. Then another large project that needs to be managed from a VAT point of view are supply chain models. From that point of view, you can consider e-commerce implementations. Because of COVID, a lot of companies are moving to e-commerce. That has a significant impact from a VAT point of view that needs to be managed then by resources, primarily here in the US. When you look at small projects, like I just said, small projects, you can think about tax audits, tax inquiries, think about ad hoc business supports when a supply chain manager gets the questions about, hey, is this specific transaction resulting in trapped VAT? Am I resulting into VAT leakage because of the way I'm operating? These are all ad hoc questions that a resource within your company often deals with that falls within VAT. Part of this presentation is we're going to continue talking about the system upgrades, tax technology upgrades, and supply chain model changes. And we're also going to talk about the business expansions. So what are the practical VAT complexities when you are managing non-recurring activities? There are many to mention, but we thought to highlight a few of them over here. If you think about a big project, then you can imagine also that such a large project is a day job itself. An example would be if you go into a global tax engine implementation. Well, a resource within your company who is right now managing VAT already has a day job, already is executing certain activities. And then when you start such a large tax engine implementation, that's like saying that that's like the same as having another day job. So that specific resource will be executing 2 day jobs now. We see that happening a lot, and we see that being often a bottleneck and frankly a risk to execute and complete such a tax technology project successfully. At the same time, because when it's a global project and we're talking about VAT, VAT is a real multi-country VAT implementations, meaning that one of the complexities when you go to such a big project is that you need that multi-country VAT expertise so that you know exactly what the VAT requirements are per country so that you can implement it correctly into your system. Why is that so important? Is because VAT impacts all the processes or many of the processes within your company. It impacts order to cash, procurement to pay, record to report. One way or another, because VAT is a transactional tax, it has an impact on all these different processes that then again needs to be looked at when you go through such a large implementation. VAT, as it's a reporting tax, also impacts your systems in a way that different type of data out of your system needs to be pulled to ensure that the right VAT report can be created and can be submitted. And that's then VAT data that comes out of your financial module, out of your sales distribution model, out of your material management module. It's just to highlight that when we talk about VAT and data, it comes out of different sources. Now, another challenge that we see, and I guess that comes back to how it was responded in a previous question, that regulatory is very important. We see that the ongoing regulatory changes heavily impact a large project. It impacts it from an IT point of view. When you start, for example, implementing e-invoicing solutions, nowadays, 10, 15 years ago, we may have only 5 or 10 countries in the world that had a mandatory e-invoicing requirements. But through the whole years, we've been seeing that more and more countries are moving to e-invoicing. Also this year, more countries are moving to e-invoicing. So that ongoing changes heavily impact when you're going through a large project. It impacts the VAT retention on how do you save data, what's actually allowed by the tax authorities. And again, this is then by country that needs to be looked at. That same regulatory changes also impact your compliance, not only from a data point of view, but also how you file compliance. I mean, you're seeing in many countries in the world that are moving to e-invoicing, almost real-time e-reporting that needs to take place. And then when the complexities that we also see, and it's more in a practical project matter, is that VAT impacts many different stakeholders. simply because it relates to purchases, it relates to sales, it relates to how you manage your vendor and customer relationships. So often we suggest that when you go through a very big project, that VAT, it's a work stream by itself, and that VAT as being work stream has a seat on the table when it talks to other stakeholders within the project, because a lot of different stakeholders are impacted by VAT. Now, how do we see companies when they are embarking on a very large project? How do we see companies managing such a project? We've tried to highlight on this slide different type of options that we see in the market and different type of approaches that companies take. So depending on the type of project, a different approach might apply. But you see on your top left that companies go for and go to work with a tax implementation partner. That means that they outsource certain activities and certain work to a third party, and that implementation partner manages the PMO, execute the project, is a subject matter expertise, knows VAT very well, and knows it from a multi-country perspective, and is able to share best practices, as such an implementation partner has already implemented these solutions or has done such a large project before. A downside, if we could call it like that, of working with implementation partners is that if you compare it with the other option, an implementation partner often results in a high blended rate compared to the other options. So then another option would be if a company decides to hire talent. Well, the talent itself could also execute the PMO, execute the project, and at the same time as that talent is part of the project, at the same time at a certain moment could also maintain a tax solution. What we see then as a downside of hiring a talent is that, yeah, you have the recruitment cost to consider, training cost, employment cost. But at the same time, like I said, that talent that is part of the project can only maintain a tax solution, but also can start performing other VAT function activities that needed to be executed anyway out of the US. Well, a third option that we see companies executing is instead of instead of hiring talent, looking for an interim loan staff that is necessary for a very specific project. Because like I said, some projects are so time consuming and becoming a day job by itself that instead of hiring a talent, the clients decide to say, we're going to look for an interim loan staff that can help us execute this very specific project. And when that project is completed, the interim loan staff will not be necessary anymore. Again, that loan staff can execute similar activities like an implementation partner or hire talent. It can execute PMO, it can execute the project itself. And at the same time, because it's a loan staff, if we compare that then with respect to an implementation partner, if you see that it's often on a lower blended rate. And you see also that the costs are fixed because it's like a 40-hour a full-time engagement compared to an implementation partner where you actually agree upon a certain scope of activities. Now, through the years, we have seen in the market that there are also hybrid approaches, depending on the project, depending on the client needs, depending also on the client experience of certain type of implementation or certain type of large projects, that we get into hybrid models such as what we in the dark blue that we refer to the interim loan staff model that sits between an implementation partner and hiring talent. The difference between pure implementation partner and interim loan staff is that if you are in the middle as an interim loan staff model, you work directly with the company as an interim loan staff, but at the same time, you're also guided by a tax implementation partner who then can share its tax best practices to the loan staff. As you can imagine, such an implementation partner has a broader experience than a loan staff itself. But by using that model, we see that you do get the implementation partner benefits as best practices, subject matter expertise, but also the loan staff benefits which are a lower blended rate. Now, how does that look like? And we wanted to highlight, on this slide, we wanted to highlight the interim loan staff model because we see that more and more in the market, that companies are looking for that, are looking for not only a loan staff that can help execute, but at the same time a loan staff that it's being supported by a tax implementation partner who can share, like I said, supervision, who can actually share best practices, who can provide that specific loan staff end-to-end support from a pure functional and technical point of view. So it's like the loan staff executing it, but at the same time, the implementation partner on top of it, guiding that loan staff, ensuring that yeah, you get the best of both worlds. Well, it's the loan staff then focuses, of course, on business processes, making sure that it understands the touch points in all the different type of processes within your company. It for loan staff ensures that the tax advisory piece of such a project is always taken into consideration, making sure that you do the VAT analysis and necessary to avoid VAT registrations, if possible, to avoid VAT leakage, making sure that that the company is in compliant with all the different VAT rules globally. Then a loan staff like that will also have experience on how to implement tax technology solutions. And it's, for example, part of testing, doing SIT or UAT. It's part of creating training materials. It's part of creating a business case. That's also different type of activities that we see a loan staff being part of. And then as last point to talk about loan staff, type of activities that we see them performing is focusing on ERP integration. This is one in our experience that often is overlooked, in the sense that, yeah, when you start, especially when you start a tax engine implementation, that the focus is very much on making sure that the configuration within the tax engine is correct. But then when you start looking like on the connector between the ERP and the engine, there's a lot of work that needs to happen there too. And yeah, we see more and more than loan staffs are also focusing on that, because that piece of work, making sure that connector work, is often as time consuming as configuring an engine itself.
Angela, we did have a question here, if I might jump in. The
Sure.
question is, how can we avoid the compliance risk when we have global purchase order opened in US, but US tax department doesn't have VAT tax engine? The OUS purchase was charged out via internal company transactions.
Okay, could you, it's charged out internal company transactions, you said, right? Okay, so, and maybe we can go back 2 slides, Michelle, for a second. Yeah, perfect. And again, that maybe to start answering that question is we're looking at, yeah, when you get these type of questions, how are you managing them right now? I mean, by part of the question, I understand it relates to a US company that is incurring a lot of VAT on POs or needs to manage the VAT on POs. Well, there are different ways to deal with that. Or you hire a talent that understands VAT very well, so that when such a PO is issued, a person, that new resources could take a look at the PO, double check if the VAT on the PO is correct or not. I guess that's that's part of it when you don't have a tax solution in place. Or you can work on what we refer to in the middle of the screen on ad hoc support with an implementation partner, that you reach out to your implementation partner when you get VAT on a PO that you don't know exactly what to deal with. It's very hard when it comes to VAT to know exactly how it works on a country by country basis, because again, VAT is a country basis law. So I would encourage that when you get those type of questions and you don't know exactly what to do with it, or you work with your implementation partner, or you hire the right talent within your company to ensure that you don't end up with POs that have VAT and you're paying VAT where you should not. And we have a lot of conversations about that with US-based clients that are having US companies that operate internationally. And then because they operate internationally, they deal with foreign vendors, and those foreign vendors are charging them VAT where they should not. I hope that answers the question. Please feel free to ask a follow-up question. But let's continue. Let's continue on a different non-recurring activity that we see that a lot of US clients are dealing with, but that is not a large non-recurring activity, but a smaller non-recurring activity, and that relates to US companies that are expanding globally. US companies expanding globally in the sense that they are already a global company, but are now moving to another market, to another country that they have not had operations so far, or are setting up new legal entities, are serving new customers in specific countries that they have not served before, and at the same time are serving them in a sense of services that they're providing to them, but also maybe shipping of products to certain countries that they have not shipped before. So if you think about that, what really matters? So what we start with is by making a distinction between looking at it from an invoice point of view and looking at it from a pure shipment of products point of view. So when you look at invoices, we see that companies are operating in two ways. Or a US company is issuing an invoice directly to a customer in another country, or a US company has set up an affiliated company in another country, and therefore that US company issues an invoice intercompany first, and then that affiliate company issues an invoice to a customer. For both type of invoices, or direct invoice or an invoice via an affiliated company, there's similar type of questions that arise, and there's similar type of VAT impacts to consider. And the first one is really, do you think that on that invoice that you issue to your customer or that intercompany invoice, whether VAT should be included on that invoice? To really answer that question, that you need to look at it by country, but you have to look at the VAT laws by country. And we see this taking place a lot when it comes to also e-commerce. There are, over the last years, a lot of new e-commerce rule that has arisen that result in US companies that are issuing VAT invoices directly to customers have to then charge VAT at from the customer's country's establishment, and then also have to register in those countries. But if you have to charge VAT and you expect as a company that you have to register in those countries, then the question also comes is, how do you manage all these different VAT rules and VAT registrations in different countries? We see in the market again that there are different ways how companies are dealing with that, how to calculate VAT. They deal with it in a way that if it's minimal transactions that are taking place globally or taking place within a country, that they just take care of it manually by manually adding VAT on an invoice to a certain country when necessary. We also see that they just decide to configure the native ERP system and have tax calculation taking place out of the ERP, or they go for a tax solution. Because a tax solution, like a tax engine, is then a bolt-on of your ERP. And within the tax engine, you already have the content available to make the determination whether when you sell to another country, whether VAT should be on that invoice or not. Now,
Angelo, on that point, I mean, what do you see? Do you see what factors might drive a company to use native ERP versus tax engine?
Sure. Thank you, Johnny, for that question. Yeah, it comes back to a company maturity. It comes back to how multinationals, how big is this company already operating multinational? So in how many countries are they already active? We see often that when a company is active in, let's say, 1 or 2 or 3 countries, they or do this manually, or decide just to use the native ERP configuration because they are minimal transactions. They don't have to think about a lot of different VAT laws. They only have to consider 1 or 2 countries because they're only active in 1 or 2 countries. But it switches very quickly when a US company is active in, let's say, 5 to 10 countries in the world, where it becomes a lot more harder to keep track on the different type of changes happening. And it's a lot harder to ensure that you can configure a native ERP system well. Because a native ERP is easy to configure if you only have to consider one different VAT result because you're only dealing with VAT in 1 or 2 countries. But it becomes very hard to configure if you're dealing with VAT in 10 or 15 different countries. But that configuration needs to come all out of the same type of framework that an ERP provides. That's where a tax engine is a lot broader, and that's where a tax engine provides a lot more functionality to be able to manage those different type of VAT in those countries. So now going on and looking at when you not only focus on tax calculation, but like I said, if you have to register in a country because of the invoices that you issue to a customer, means that you also have to register in that country. And so you have to also file compliance in that country and file VAT returns. And then the same question, like tax determination, is also about VAT reporting. Like what makes the most sense within your company? Does it make sense to file those VAT, to have a compliance process and a compliance model to file VAT reporting in-house, that the US company does that themselves internally? Does it make sense to outsource, or does it make sense to co-source? And again, maybe to join it to your initial question on tax determination, similar to compliance, we see that when a company has a small footprint globally, it does the compliance in-house. But when a company expands to like 10 to 15 countries in the world, then you have to, or you hire a lot of resources in-house to be able to file all those VAT returns on time, or you outsource the work to a third party, because at a certain moment, the effort to file compliance, the more countries you are in, the harder that is.
And Angelo, on that outsource, do you outsource it to the different countries? Like you find a local provider, or are you seeing both? What are you seeing in terms of that outsourcing?
The outsourcing, especially when it comes to multinationals that are more in 10 to 15 countries, they find a global provider. Okay. They find a global provider can help them standardize their process of data being submitted to that global provider. And then with that global provider, they file VAT returns in those 15 countries. When they are only in a few countries in the world, we see that they use local providers, because there's, again, not a lot of activities, not a lot of centralization necessary. So then 1 or 2 providers is good enough to be able to meet the compliance needs.
Great. Thank you.
One thing to highlight here, and I'll be brief, is we talked about invoices and what to consider from an invoice point of view. But when companies also deal with shipments, then there is also a lot of VAT impact when it comes to shipments. And shipments could be, in essence, be done in 2 ways. Or it's a direct shipment from the US to a customer, or it's a shipment via distribution center in a country, and then from that distribution center, it goes to a customer. What's to highlight here is that in both type of shipments, when products enter to a country, you have a customs border, and at customs, VAT should be paid, import VAT. So really the question here, when you're dealing with these type of shipment, is who is paying that import VAT? Is that the US company, affiliated company, or is that your customers that are paying the import VAT? Why that is so relevant is because when import VAT is being paid, US companies should also think about how to reclaim that import VAT. And often I see that's being forgotten. They don't think about that. They pay the import VAT, don't reclaim it back, and therefore it becomes a leakage. So that's one thing to highlight, making sure that when import VAT is paid, that companies think about how to reclaim that. And at the same time, there's a lot of reporting requirements when it comes to invoices, but there are also reporting requirements when it comes that specifically relate to shipments. So a shipment itself in the VAT world also results in reporting requirements that, again, companies have to deal with by using a technology, doing it in-house, or outsource it. Now, it gets us to the next polling question, and that is, what is the primary concern related to VAT within your company? Is it current tax audits? Is it not recovering VAT incurred, like import VAT? Is it having not enough resources to manage VAT? Or what we see sometimes in the past is that there's incorrect data in IT systems that impacts VAT reporting? Or is it unable to keep track of regulatory changes? I kept other in case there's other type of concerns within a company. And this one is actually going very same. It's like almost very equal. Everything is around 20%. I was not expecting that. I was thinking that you would have more focus on the non-recovery of VAT. What has been your conversations with clients, Johnny, when it comes to this specific concern?
The expansion, like not enough resources, you know, how to manage it, how to add this new compliance requirement to an already existing process that they have is usually what I see as the biggest gap.
Yeah,
so very
agree.
interested to see those results.
Yeah, no, I mean that comes by all the time because of especially during the large projects. You need a lot of resources.
Well, look, you've got the #1 answer, not recovering VAT incurred. So you called it.
Yeah, it's import VAT, I guess. Yeah, well, but it's good. Well, thank you all for sharing this information. That gives us a good insights on your primary concerns. Well, we talked about non-recurring activities and how you can split them between large non-recurring, small non-recurring, how they're dealing it by tax implementer, talent, or using an interim loan staff. But besides non-recurring activities, you of course have also recurring activities that are part of VAT that are being managed on a monthly basis. Highlighting a few of these here is especially when tax technology solution has been implemented or tax configuration has taken place in native ERP, is the maintenance thereof. We see more and more this becoming a day activity for U.S. company resources that they on a day-to-day basis have to look at their technology solutions, maintain them in the sense that maybe an error is coming up, that the tax solution is not picking up the right tax code, or the sales order cannot be processed. So we see as maintenance of being a significant time-consuming activity during recurring activities. Besides that, we also see compliance, like we just talked about. That's also a monthly or quarterly activities that companies have to execute on. Besides that, vendor relationships. A resource works with a tax engine provider, works with an ERP solution provider, works with a tax implementation partner, works with other types of vendors. As an example, a lot of companies have an e-invoicing solution, which again is a different vendor that also impacts VAT. So we see that also on a monthly basis, the vendor relationships and communications is a time-consuming process during the month. Then other activities that relates to VAT is the internal audit within your company. We see that within the internal audit, there are VAT controls. And those VAT controls are very important to ensure that you have the right master data to calculate VAT. You have the right VAT documentation that when an audit takes place, that VAT documentation can actually be provided to tax authorities. A lot of those type of activities are part of internal audit that are very important. And besides those internal audits, you also have your business processes support. When a sales order is being generated, when a new transaction is being included into the system, then always questions arise to the resource within your company that manages VAT. Then one that I guess won the polling question is the VAT refunds. That's an activity by itself in the sense that invoices need to be collected, contracts needs to be reviewed, VAT refund schemes and processes needs to be submitted so that you actually, as a company, you can receive your VAT refund. And one that has been coming up more over the last year or two is bad debts. Is when an invoice was issued to a customer and on that invoice included VAT and that VAT has been paid to the tax authorities. Well, by bad debt schemes, actually that VAT can be requested back from the tax authorities when your customer did not pay the invoice to begin with. Then again, as a recurring activity is again the regulatory changes that are taking place on a monthly basis. And a resource that deals with VAT within companies, they have a lot of impact analysis that they perform on a monthly basis because they know their business very well and they constantly have to think about, okay, this regulatory change that took place in this specific country, how does it impact my IT? How does it impact my overall VAT profile so that they can maintain and manage the company well from a VAT point of view?
Hey, Angelo, on the refund side of things, I mean, in your experience, I mean, how much time and effort is required on that recovery of that input VAT?
It's a very it's a mixed bag, Joni. It's a mixed bag in the sense that for some activities it's a very time-consuming activity, especially if you look at one that happens a lot in automotive is tooling. For tooling activities, often VAT is charged. It's an extensive activity because you have to look at first whether that VAT was charged correctly. I would say half of the time that VAT charge was correct, and therefore you have to go through a VAT refund process, collect the contract, collect the invoices, submit that to the tax authorities. That's a time-consuming process itself. But sometimes that VAT charge was incorrect. And then you go into a different remediation process, looking into your IT solutions, why it was not picked up, looking at your processes, why was that invoice not rejected when VAT was charged that should not have been charged. And then you have all the different type of activities like T&E, intercompany transactions. I would say, Joni, that the reason I'm saying it's a mixed bag is because it really depends on the type of transaction that you're asking VAT back for that can result in an extensive process to actually get that back.
Okay. Makes sense. Okay, thank you.
Go to the next slide, please. So now one of the activities that we were mentioning as recurring activities is compliance. So I wanted to have a separate slide on this because we see also in the market and our clients dealing with compliance in several ways. On the left, you see that they're dealing it in a way that it's all in-house, or they are dealing it in a way that it's co-sourcing or outsourcing. There are pros and cons on different type of options, and just wanted to talk you through these to give you more insights when you are trying to make such a decision, try to decide what's the best option within your company. So when it comes to in-house, one of the benefits that we see compared to the others is that you have full control of your process. You know exactly which data, when you're filing it, what have you done through your whole process of a VAT return. You have the in-house talent and VAT expertise built up within your company that you need to file compliance. A lot of companies see that as a benefit because they have the knowledge internally. And at the same time, we see that companies are automating also in-house compliance by using a data warehouse or by going again for tax technology, focusing on a VAT reporting solution. Well, some cons around going for an in-house option is that, again, if you do everything in-house, there is recruitment, training, employment cost to consider. And when you go for a tax technology solution, there is also a tax technology maintenance cost to consider. A totally different spectrum if you go to co-sourcing and outsourcing is that, yeah, the vendor costs are fixed. You know exactly how much you will pay for co-sourcing or outsourcing. You know exactly how much you will pay from for your compliance, but you do not have full control of the compliance. You only have management control of the compliance because the activities are actually being performed by a third party. You do have business continuity, and we see that during COVID to be very, very important. And the reason for it being is because if you initially were doing it in-house and COVID impacted you in a way that you could not continue to execute because the right data was not available for you, I've heard and seen those circumstances during COVID, which of course did not happen when you outsource it, because you do have business continuity as a vendor takes care of that for you on a monthly basis, and you don't have to worry about a tenant leaving, for example. So another benefit is when you look at compliance is that you will have the technology, you have the availability of technology of the vendor, and you will have access to that global tax consulting that the vendor can also provide. This is actually the last slide that we want to talk through a bit, is managing of one of the bigger trend within the market right now. It's when there are certain recurring activities that could be managed under a managed service offering. And just wanted to highlight the different type of activities that we see in the market being outsourced to vendors. The first one is troubleshooting of a tax engine or SAP configuration. So when a sales order cannot be processed, when you get the wrong tax result, instead of companies going into an engine or an SAP trying to figure out what's wrong and troubleshoot, those type of activities are being outsourced. The same we see for reporting. We see that reports as the regulatory changes keep changing. We see that reports also has to be updated. So instead of companies trying to in-house figure out how to enhance these reports or in SAP or a tax engine, we see that also these type of activities are outsourced to third-party vendors. As the third-party vendors knows very well how SAP work, they know very well how tax engine work, and for them maybe a lot easier to make those enhancements than for somebody that has not done that before. Then the third type of activity that we see that's being outsourced as a managed service model is creating and maintain new configuration. When you expand to a new country, when you are creating, having new supply chain models, instead of somebody in-house trying to, again, figure out how to configure that and how to maintain that, again, we see that those type of activities of creating new rules within Vertex or within another tax engine, validating, testing it, that also it's being outsourced to managed services. That gets us to the final polling question, which is, if you have any interest in any further discussion, please feel free to complete it in multiple choice. It's loan staff, further discussions, compliance, data warehouses, managed services, or tax technology.
Well, Angelo, that was really, really helpful. I learned a lot. And so, you know, what would you think would be a next step in terms of areas that we would want to share with our, you know, our clients from a VAT perspective?
I think, well, first of all, of course, we are open to understand what are specifically the client's IT roadmap, for example. Mm-hmm. Do you right now are focused already on doing a certain implementation? Well, we at DMA are more than happy to look at that IT roadmap, share our point of view, share the pitfalls of what we see during such an implementation. And when it comes outside of tax technology, I think the starting point with our clients is to really think about and talk about what do they manage? What are your responsibilities? And based on those responsibilities, talk about how can that be enhanced and what can be done differently to keep managing VAT more effectively in the US.
But I do want to thank our presenters, Angelo and Joni. Thanks so much for sharing such amazing information with us today. To all the participants, we will be sending out the slides via email. You will get your CPE certificates via email, but please feel free to reach out to us. Either Joni or Angela or myself, Angela Schrock, you're welcome to email me as well. But again, just wanted to thank everyone. We'll stay on the line here for a few more minutes in case there's additional questions. But again, thanks for joining DMA's webinar series, and we look forward to seeing you on a future webinar.